The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 128, Nasdaq off 71, S&P's down 9, gold flat 15.18 an ounce. You get silver up 2 cents, $17.97 an ounce. Light sweet crude also flat, $61.85 a barrel. Notes and bonds. We get the 10-year down 11 ticks, 128.10. 30-year off a full point plus 7 ticks at 155.22. King dollar down 175 ticks, trading 96.746. The euro is at 112. The yen is at 108.85, and the pound is at 131 to 1 U.S. dollar. And I just heard you 2 days. Actually, today and tomorrow, I didn't. We were just talking, folks. I didn't
better
realize
get
that
with it.
tomorrow
That's
night
right.
is New Year's
So
Eve.
what are you doing? Tomorrow night's New Year's Eve. You said, no. Yeah, that's how it works, man. Tomorrow night, December 31st, New Year's Eve.
2020, here we come, folks.
Yeah, and it is interesting because we get off Wednesday. I know your head's going, you know? So
Right.
it's like, oh, wait, no, tomorrow's the big night for everybody.
Right.
Market's closed on Wednesday. But, you know, we're
working Thursday.
Yes.
We get a good interview, in the morning, folks, at 20 past 10 Thursday morning. We got Fred Ernest, who's the CEO of Vista Gold, coming on.
Okay, good.
So we'll check that out.
All right.
So market-wise out here, well, let's see some of the higher volume equities. And, you know, bottom line is we get holiday trading in spades. There's no doubt about it. And I expect that all week, too, by the way. It's not going to be like we come back the 2nd and it's going to go. There's still plenty of people on vacation.
What is that Monday? The 6th, yeah.
Yeah, the 6th. So we got Advanced Micro down $1.16. You got Rite Aid off $2.50. That's been a rocket ship. I mean, it's $17 stock, but I think I just went from 5 to 17.
Yeah.
Pretty amazing.
Yep.
Tesla's down $15.
So much for 420, but
yeah,
go ahead.
You got Amazon. We're looking
There's
at
some
Amazon.
selling. Apple as well. Apple off more than $3.
Yeah.
Amazon.
You got Amazon, I think, down $15.
All of these companies, though,
right?
last week even alone,
was
just
a monster
banner.
Yeah. I mean, look at Amazon on Thursday. Well, no.
Thursday.
Thursday. Yeah,
Yep.
Thursday went from $17.99 to $18.70. You know what I just heard? I got to pull this up. Netflix. So Netflix, they're saying Netflix is up 4,000% in 10 years.
I would believe that, yeah. I think Netflix was the best performing stock of the S&P for the decade. I saw articles headlining that. Yeah, $8 up to $3.50. That's a decent return.
That's pretty amazing, man.
It is.
That's
And even, let's just see where it went here, $7 back in 2012.
Yeah.
And if you remember, man, this is when they were still focusing on DVDs.
Yeah.
You know, I mean, they were selling,
in the mail.
yeah.
Right.
I mean, I think it'd be interesting to see. Do you remember when they split off?
I don't.
I'm just saying when
I remember when it happened, but I don't remember the year.
Because you used to have maybe online access and DVD access or something. They were like, hold on, we're splitting that off because
That's right.
we're not going to be sending DVDs to everybody anymore. It's going to be online. And everybody was like, whoa, what are you doing? You know, and there was a backlash. But they saw the future, man. Who gets
Could
DVDs?
you imagine picking up a DVD now?
Yeah,
Or
exactly.
waiting for a DVD to come to
Exactly.
Oh, my God.
Exactly.
That's like unheard of.
Yeah. Hey, can we jump around? We'll
Yeah.
stay on Netflix. How about Disney? Because Disney...
Disney's up 400% in 10 years.
Are they? Yeah.
That's a monster. That's right.
It sure is, man. And
so here, let's put this back. This
Rise of Skywalker. I think they did another $75 million this weekend.
There you go. $28 to $144.
Yeah,
right?
huge. And that in 2011, Disney was a lot less risk than a company like Netflix was.
Yeah.
In terms of Disney wasn't going anywhere. Okay, they might not have went up, fivefold. But Disney World, Disneyland. The movies, Mickey, all that stuff.
It's not a one product bet.
Because Netflix still, they have a battle, man, in terms of, what's going to happen. Where are they going to be able to compete with the likes of Disney? Disney, I saw an article today. We'll jump all around. So how about the morning market report? Because this morning even, One of the headlines I found interesting is that
And the morning market report, folks, is over at our website every day. Tom does it in the morning, he does it in the afternoon. So check it out. It's free, right on the front page.
So one of the headlines there is that Disney accounted for nearly 40% of the 2019 U.S. box office. I mean,
Wow.
think about that. Think about the amount of people that recreationally go to a movie theater
Sure.
over 365 days, and almost 50% of the money spent went to one company, Disney. And then think about the fact that that doesn't even play into the fact that they're going to start streaming.
Right.
And that's just
Right.
going to be a content funnel
Right.
to the streaming platform. And so the Rise of the Skywalker topped the weekend box office second straight time, $72 million in just North America. 6 movies Disney has over the billion mark this year, and the Skywalker is probably going to be the 7th, I would imagine. I mean, that's just remarkable, man.
It is.
You know, the other thing in here, so I have, charts of course, the S&P. What I included today, which I haven't usually included because it's done nothing.
Okay.
How about the VIX, man? Where are we at right now?
So that's interesting. So that VIX was popping. You did this before the market.
That was the first
So,
open.
see-
That was 9:30. But even
9:30,
before
okay.
it, I had this on the radar, all right?
Okay.
And I just happened, what I did was I was doing it, and I
Oh,
said,
that's
you know
cool,
what, man? I was almost going to include, because even before the sell-off,
Right.
what's the VIX doing at 1380
Yeah.
from 5 a.m., 6 a.m. this morning?
Okay.
The S&P's within 8 or 9 points of an all-time high. S&P's
Right.
up for 5 straight weeks coming into this
Okay.
week. And something was going on in that VIX.
Yeah, it was.
And,
it was underlying insurance, and guess what? They were right.
And we're now at 1476, man. I mean, quite an escalation, even overnight.
Yeah,
to keep your eye on.
It
for
doesn't
sure.
take much.
And then just some of the stocks. And what I did was I just saw things starting to sell off, and so I added some charts right at 9:30
Nice.
because it's like Tesla, man, right?
Yeah.
Selling off. Now that 423 on the open. I think that Tesla's right now at 415. Amazon was up. Not so much. We've had a
Yeah.
little turnaround. Disney pulling back as well, and Netflix is like we talked about as well. Uber pulling back. There's a few of them.
Yeah.
Even Boeing.
Well, this is there's no doubt. This is, you get till tomorrow,
Yeah.
whether you want to pay your taxes
That's
on a
right.
profit this year, next year, and/or what ends up happening, folks, is that you can, you have losses. You basically sell some winners
Yeah.
to offset the losses.
Right.
So you don't pay any taxes.
Yeah. Yeah.
Which is huge.
Definitely. Definitely.
Big number.
Tax planning, an important part of keeping the money you make.
Totally. Now, watch this, folks. This is pretty impressive. The dollar is right on the cusp of breaking a much larger uptrend, rather. And this is the first time that we've actually had 2 downtrends with conviction. That would be wide price spread, fast price movement since February of 2018, since its uptrend. Let me see which one I want to do here. I think I was doing 5-year weekly. No, let me do the 5-year monthly. But you're going to see that I did 3 years. Yeah, so this is right on the cusp right now. Hasn't broken it yet.
Sure.
But when you see this, it's pretty impressive. Yeah. Oh, it's laid out. I mean, it's really close. Well, we're just tucking. You can see you're just tucking your nose, underneath it. Oh, yeah, you can make. Yeah, you can
What
make
about that one? That's what was sticking out in my mind.
No, so check this out.
Yeah.
Inside the gold report today, folks. So this is what I had. That was the first break. And this is the second. That's the first time since the uptrend of 2018 that's happened.
Because that one's like nice and clean.
It is.
What is that?
No,
June of 18.
Yep.
September of 18.
Yep.
Really close to that. January of 19.
Right.
And then June of 19. And
Yep.
boom, right under it. Yeah.
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 193, Nasdaq's off 90, S&P's off 17.5. 18.
What's happening over there, man?
That was a fast sell down.
We're a quick 1%. Well, the S&P's got 29% in its pocket to give back 1%. Not the end of the world, but that was a quick 1% from the highs. And I believe the high in the S&P 3252 or 3254.
Okay.
And we're sitting at 3220, man.
30 points.
Yeah.
So if we go finish out this dollar, what you're going to see here, folks, is this: so your trend line from the June swing low,
Yep.
94,788.
And that's June of 18.
Yeah, that's a break with conviction.
Yes.
Okay. Now it's approaching the trend from the very beginning of the uptrend, which is in February of 2018. And it's pretty cool because watch this. Now, if I take it this way, and not that I use moving averages, but you're going to see this is the first time that you've had, let me get rid of that trend line there, that you've had this type of break.
Moving averages everywhere.
With conviction. Now, why do you see this? I put this on, I'll put this on, I even put it on a year. What you're going to see is, this is a decisive break here. And the first one is the one that you picked out first. That's
right.
the December one,
Yes.
right? Which is really cool. And this is the first time from December of 2018 that you actually have, well, here, I'll bring it all the way back. I got to bring that back 3 years then, right? Daily. You'll see that, bottom line, this is the first time we've done that.
Of the 200, is that what we're
Yes.
looking at? Yeah, the green one. The yellow one, excuse me.
Going all the way back to 88.25.
Yeah.
So that's, that's saying quite a bit.
Oh, for sure.
We'll see.
Be interesting to see where it goes from here because we did. We went down. We got a little retest.
Yeah.
And then watch out. Watch out.
The classic Bud Ross.
Yeah, I was thinking of it, man. You got it.
The trend.
You break the trend, you go back up when you test it, and then bye-bye.
Exactly.
Yeah.
So we go take a look at now let's go take a look at the 10-year and the 30-year, because to me, this is going to reject lower price again. Now watch how this is set up, because this is a sick setup, man. So
lots of action in the bond market today,
big time. And, we've had light volume the whole time, which is expected.
Yes.
Okay. So I would have really liked to see when we had got down there on the 19th, we almost made the low, 127.29. The low was, well, we did make the low. Interesting. 127.29. We hit it perfectly. Look at that. It does. You know, so isn't that funny? It doesn't look like it hit it when you're looking at the chart. But,
I kind of know what you mean.
but 127.29.
See that again? Because I agree.
Yeah.
Is it? What do they take a, yeah. Let's see, so 127.29. I wonder what is that plus? See that?
Yeah, I did. Because the digits do go out.
Yeah.
Did
So
you
maybe
see?
that's
The
why.
digits do go out.
It's 127.29.9 maybe or something
Oh,
like
that's
that.
cool to know, though. That's the first time I've seen that. But the digits do go out in the
Yeah.
bond market.
Yeah.
So bottom line is
Either
that
way, yeah.
we're coming back into that area. Now, that had 1.2 million contracts. We're at 400,000 today, 478. Now, that can do it. You know, we'll see what it shakes out. But that is still saying to me that this thing still doesn't want to break down. Oh, look at the 30, though. Hold on
We
one second.
got some moves,
no,
man.
the 30's breaking it.
I mean, the 10-year yield, just as you pull this up, went from, I think it was 1.87
Yeah.
to almost 1.94 today.
Okay.
That's a huge move, man.
It is. Okay, so now here, this is cool. The 30-year has broken the downdraft of the 13th. You broke the downdraft of the test of the 10, which is the 19th. So now you're dealing with 155. We did, the 155 is the downdraft of November 7th.
Yeah.
So there's a lot.
Yeah.
There's going to be a lot of moving pieces
Let me just
out
jump
there.
around. I had a chart up here. Let me see if it's still up here. The yield. Yes. So, do we have inversion? No, I have it. We'll find it during the
can put the
break. They were
10-year.
talking about the inversion. No, here it is. So the headline is U.S. yield curve steepest since 2018 as Treasuries sell off. So the sell-off Monday and the final stretch of 2019 pushing the U.S. yield curve to its steepest level in more than a year.
Yeah.
The benchmark 10-year yield climbed as much as 6 basis points to 1.94, and its premium over the 2-year rate widened to as much as 33 basis points, a level unseen since October of 2018. Just before we jump away, and there's your chart there in terms of the steepening, 30 basis points. And of course, that's a far cry from when we were negative, man.
Yep.
Quite a reversal, just something to keep your eye on as well.
Yeah, I'll bring it up right now. Let's take. So curve, where are you?
No, we got to go. I mean, you're just on the trading. We got to get to the yields, right?
Oh,
to
okay,
the,
okay, thanks.
and then the
There's
curve
the
right
curve.
there.
Okay. So there you go. Look at you see the 2-year 1.587.
Yep.
And the 10 1.919.
Yeah. And
Yeah.
imagine those were inverted at one
Yeah,
point, and
I
we're now
know.
sitting under 1.6 and above 1.9.
Right next to
Quite
2.
a difference.
Right.
Yeah, quite a difference, man.
Pretty wild.
Yeah.
877-927-6648. So check this out, folks. You got the XAU, HUI. This is going to be really intriguing watching how this shakes out because they both are going for, actually, no, let me do this, okay? So the silver equities, like so far ahead of the silver contract, it's pretty amazing. Now watch this. This is really impressive. This is Pan American Silver. Now we own this in the Gold Report, but what I want you to check out is that you're going after. In fact, you've taken out the 2016 swing high. Now that's a monster move because if you were in the gold market, folks, this was the last big move that
Huge, yeah.
we had in the gold market. I mean, Pan American Silver went from $5.38 up to $21. And we did that in 6 months. It was a nonstop move. Any
400%, 300%
any
profit.
equities that you own, we caught the move. It was a beautiful move, right? This is what is so impressive about it. We're going after the 2011 highs, man.
Yeah.
So that is a monster number because we already had Franco-Nevada taken out. Royal Gold is up there, okay? But that's saying quite a bit because if we're going after the 2011 highs, guess what? That dollar is going to go lower. The euro probably is a big change of trend. And the euro hasn't changed yet. That's on the cusp where the pound has changed its trend. And, you know, but the euro, that was a monster move last Friday.
Yeah.
You know?
And it's intriguing that I saw the PAS. I was looking at the Gold Report
Yeah.
today, publishing it. And sometimes there might be a typo in it. And I saw 2011 4306. I said, man, is that right? I looked at
I
the
know.
chart and I said, oh, no,
I
that
know.
makes sense. There it is, 4306.
And
Yeah.
what Tommy's saying there, I'll put it up again, because this is unusual, folks, okay? And
That's
the
a
way,
big move.
yeah.
But I saw the chart. I said, no, that makes sense. And
Yeah.
guess what? There it is, 4306.
And what happens, folks, is that when you come down that quick, The bottom line is that when you break the consolidation,
Yeah, there's
this
nothing else there.
consolidation has been going on since April of 2012.
Yeah.
And you broke it with conviction. Look at that price spread. It's huge.
Yep.
That's like, okay, man.
Watch out.
Your next hill is 43.06.
Definitely.
That's a double from that point. So,
yeah. How
Pretty
about,
well.
how about Apple? We're down almost $4 now, and not almost. We're there now.
they're taking some bread off Apple. So let's
Looks
see
like
what we got.
they're taking some profits prior to year end on Apple.
Yeah.
And again, quite a banner year for Apple, especially.
Seriously, right?
But we're now down, 1.3, 1.
Well, you know what's going to be interesting with Apple? There's no doubt. For the amount of money that, we're talking about Disney content a lot. We know Netflix has a lot of content. Apple wants to stream.
Yes.
Where's its content? Right?
I think I heard it was Dave White talking. I think it was about Apple saying you don't want to short a company that they have hundreds of $1 billion. All they can do is buy back their own shares.
Oh, yeah,
too,
no, I wouldn't have shot it.
I know you wouldn't.
Where's
I
the
know you wouldn't
content?
at all.
Yeah,
I agree. I
Stay right there, folks. Come in. I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 207, Nasdaq's off 83, S&P's down 18. So let's go inside the Dow Industrials and see what we got. A little selling in here. Oh, look at this. Quite a bit of selling in here, isn't there? Okay, so Boeing, of course, that goes down a couple points. It's going to take the Dow south negative. Well, I look at it. Apple just jumped up the top. Apple negative 24 points put into it. Boeing negative 24. Home Depot 20. Big Mac 14.
Yeah, Boeing pretty interesting. When they fired their CEO, I believe they traded from about 330 to 340. You're now back to 326. The revelation included in there, though, was the new emails coming out and so forth.
And we haven't got news on what those new emails are yet.
We have not.
You know, and that's going to come out. I'm wondering why it's taking so long. Well, I guess Congress isn't in session.
Yeah.
You know, when they get back in session, you know, someone's going to pop that thing.
Let's see where. So, wow, look at that year, man. So they're going to finish off right where they ended. Not a bad deal when you're dealing with, you know, your company potentially having hundreds of people that you ended up.
No, it's not. I mean, because it ran all the way up to 440.
Right.
That's a big number, man.
Yeah.
There's no two ways about that. And the real question's going to be like, okay, so.
Like I said, this may be I don't know. I was going to say the CEO deal may have been the beginning of the end, and then you get more emails. And I wonder when that's going to end, right?
Right.
That's the worry to be an investor in there. And, you know, I understand, forget the call we had last week saying I wouldn't want to own that. Just from a moral sense, I can understand that, not wanting to be a part of that company right now. From a straight out financial aspect of it, though, I think there's going to be an end to the pain because, like we talk about, they got hundreds of planes that they're going to sell eventually, duopoly, and you know you do want, as just a country,
that's for sure,
to have a company that makes airplanes, as opposed to just relying on one European country to make airplanes.
I think that the hard part here is going to be that. So Dave Calhoun right now is the CEO. The real question is going to be. Right, that's what it says. President, CEO,
interim CEO. That was Greg Smith at the top.
Okay, yeah. That's
We'll have
interesting, huh? This
maybe that's no. You're
January
right.
13th.
Yeah, 2020.
Oh, I see. He's coming in as CEO.
Okay.
So Greg Smith is the interim until January 13th. I don't know what they're going to get ready for, but evidently that comes in. So the intriguing part there is that. Did the board, because all these guys were on the board.
Yes.
So did the board know that there are more letters? That's
I agree.
That's where I think it would hurt them. If they didn't,
it should.
And the other CEO was hiding it, well, then their job is going to be to get everything out, throw the whole kitchen table at this thing, you know.
And that's why I say it's only, I thought they kind of had, and I thought that's why they finally replaced the CEO. They said, we'll get all the dirty laundry out with the old CEO. We'll bring somebody new in and let them at least have somewhat of a fresh start so they're not under that blanket of negativity. And then, you know, maybe that's when they decide to rebrand that airplane, which I still think is definitely coming.
That's going to happen.
Yeah.
So let's go to Shanghai for a second. You're going to see something in Shanghai, folks. I was looking at this morning. This thing looks like it's going to break topside in a big way. I mean,
get some green on that chart, man.
This is quite a chart right here. Look at this.
That's a bullish engulfing right there, man. That engulfs just about a lot.
That's a good looking.
Yeah.
I mean, it's coming up to the top. Let's see. So
definitely.
What is that? April of 2019. It's coming up to the top of the consolidation. Okay. And let me see if I can put some volume underneath this. And look at that's on a daily. That's good volume. You pushing the swings with volume. That's 24 billion, and the Chinese market corrects me, but 24 billion, man. I mean, this is like a monster. Yeah, that's coming up, and you're getting up there, you know, with some juice. So we'll see how that baby shakes out. We just had some more housing numbers. It looks like let's see, housing. I'll bring up. That should bring it up because I saw this in the headlines. It's funny. Okay, so top headlines. More. There we go. So contract signing to purchase previously owned U.S. homes increased in November for the third time in 4 months, consistent with the residential real estate market.
Steady progress.
Yeah, so now we're going to have to really watch closely. That, you know, those 10-year rates have been creeping up. You know? So low interest rates are great for the housing market, folks. And we're all used to, I mean, if you almost can't bring this back to 10 or 15 years ago because, like, you're a buyer now, right? Well, you already, but you're the perfect buyer right now. Do you know what I mean? You just come in, you just happen to already own something, but
Okay.
you're the perfect buyer. Like, if I said to you, like, 5.5, 6, you'd be looking at me 6%.
Oh,
what?
man,
What,
yeah.
are you crazy?
It's a much more elevated cost
Right.
than you're looking at right now.
That's
Basically,
right.
what happened is your brain is set for one type of payment correlates to a purchase price in your head, right?
Yes.
So what would have to happen is that same payment, you would lose 20, 30, 40, 50, $100,000
Right.
off of the house that you can afford.
Yes.
You know, so you have a payment in your head that you're probably willing to,
That's right.
that you can't afford. Now
Now
you're
you can.
willing, right?
Right, sure.
And as rates rise, that payment's going to correlate to less house.
It
And
is.
that's the thing. Like, do you
It
say
is.
to yourself, well, that's where the market is. And that's what you better do, because that's
No,
where the market is, you know?
Let me tell you
You can't
something.
say I wanted to go back, because,
No.
yeah, of course you do. And just the only thing to add to this, though, is that it was up 1.2%. Was the increase. Pending home sales climbed
Yeah.
1.2%. The median analyst estimate was 1.4, so
Okay.
it missed it slightly.
Yeah.
But the numbers did range anywhere from 0 to 2.5. So
Okay.
pretty close to in line with the estimate of 1.4 month over month.
Yeah, so signage up 1% in the Midwest. We're down in the South and the Northeast. Down in the South. That's
Yeah.
a big one.
Yeah.
Yeah. So it's all about what you can sign for, folks.
Yeah, we got a little bit higher rates today, man. 1.94 on
Yeah.
that 10-year.
Oh, yeah. No doubt.
With some volatility.
We go take a look at the, pull this up. We'll go into the silver market. So silver as well as gold. I caught that bid. Oh, this is a nice setup. Okay, so silver, got into the lows of Friday today. You get a nice spike high on last Thursday, 18.13. This looks like it's setting up a small ABC up that trying to take out this consolidation. That consolidation is from September of this year. And we're going into January, right? So
January 2020.
I know, I love it.
Remember you had a 2000 party?
I know. Well, that was a good party.
That was a good party. And I remember because the glasses lined up perfectly, folks, in 2000, because you had 2 zeros, any year 2000, right? You had
Yes,
the 2 zeros
the
for your
sunglasses,
glasses.
yeah.
Well, we're going to get 2020. Now you can have those, there'll be 2 zeros. You just move them over.
They're even better.
Yeah.
There should be more parties in 2020. I don't know why I'm not doing anything. Because it just sounds more futuristic. Well, I got till tomorrow night.
You got 36 hours, man. You got you got 37 hours and 22 minutes left in the decade.
That's pretty wild.
There we go.
Franco, Nevada, that's at all-time highs. So that's a stream. Royal Gold's finally pitching a bid out here this morning. It needs one. It's up 216.
Good movement.
Yeah, no,
with gold flat.
That's definitely a good move.
Yeah.
That's 123.57. Our phone number is 877-927-6648. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials down 182. We get the Nasdaq off 71. S&P's off 14.5. And let's go see refinancing. What's happening in the refinancing
Staying
market?
with interest rates, staying with home mortgages. So this article from the Journal, I read this weekend, pretty interesting. Just to look at in terms of, a lot of people, which is nice, haven't really depleted the values to their homes over an abundant level that we saw in 2008, right?
Right.
And what this article talks about, though, is that people are taking out some of that cash, but they're actually doing so by increasing the interest rate that they're paying.
Okay.
Because rates have been low for so long that their mortgages that they had were at a lower rate. So even at rates at 2%, you have a lot of people that had interest rates at 3.25% or something like that, where they're taking the money out at a higher interest rate. So nearly 60% of cash out refinancings in 2018 came with higher interest rates. I mean, that's remarkable when you look at where we are right now.
I know.
That people taking money out, and it's because, you go back 5 years ago or something, we'll pull up the yields. The biggest share since before the financial crisis. And this year, that number fell to around 44%. So that was 2018, you were at 60%. This year, it's 44%, but it remains at more than 3 times its average between 2009 and 2017. This corner of the mortgage market illuminates the cross currents in the U.S. economy. After about a decade of rising home prices, homeowners are flush with record amounts of home equity they can tap, but many people remain short on cash and are increasingly relying on debt to fund their lives. And so, financial sense-wise, it probably makes sense. Even if you're going to raise your interest rate from 3.25 to 3.75, if you're clearing credit card debt off your slate that's at 21%, okay, even if it's 10, 15, 20,000, even if, that's an absurd amount to be paying that type percentage, that's a sound economic decision. So, and this is where for some owners, the trade-off's worth it. While mortgage rates have crept up, they're still lower than what a borrower would pay if they tapped a credit card or home equity line, which many people unfortunately are. Cash out refis made up a significant share of refinancings in the third quarter, helping fuel the rebound in the mortgage market. So let's see. The average 30-year fixed mortgage rate has been under 4% for much of the year.
Pretty cool.
Low by historical standards, but here we go. Higher than periods in 2012, 2013, 2015, and 2016.
Right.
Yeah. Black Knight found that 39% of people who did cash out refis in the third quarter had obtained their mortgages during those 4 low-rate years.
Boy, it's got to be tough to, I'm at 3.75, and it's like
3.1, I'm sorry,
3.75.
3.75. I just refinanced in October, and I got 3.75.
Which is so sweet.
Yeah.
I mean, and it's hard to, change that.
And I did not do a cash out. So just for what I didn't feel like it, I just wanted to get that number down and but I mean, I don't know this month, 4.625%.
See, that's not good.
That's-
Paul Thompson, who works in product development, got a mortgage at 4% when he bought his Dallas house in 2015. This month, he refinanced at 4.625.
Who was he working with, man?
He needs a financial counselor because
He does.
that is
a very high
cool.
rate. Who knows what his credit is? To be fair, maybe he's got some tough credit, but 4.6 this month.
And we both
When
know
the 10 year is sitting at 1.87, 1.9, that is a huge premium. I mean, usually, what do they say? It's about 2% above the 10 year.
Yes.
Is like a fair value around,
That's
give or
right.
take.
That's
and,
right.
And you have a lot of variables that come with that, all right?
Yeah.
Of course, credit, all that stuff. But 4.62%.
Yeah, they picked
in this environment.
They picked a bad example.
They did. I agree.
And so, because what's also happening here, folks, they're not showing the closing cost on this.
Yes.
And you know, if you're taking out 30,
It's an important one too.
Yeah, because if the house is $300,000 or $400,000, the closing cost is going to be $12,000 or $13,000.
Yep.
You know.
Yes.
So
Totally.
that's at least, right?
Yeah.
At least.
Right around. That's a fair value, right?
You know.
Yep.
So.
Yep. I mean, sometimes you can get 3 points maybe. So if you're doing 300,000, you might be looking at 9,000.
Right.
To refinance, and it depends.
Right.
If you go with your current lender, you sometimes can save some money versus
Yes,
going
that's
outside
right.
of your current
That's
lender.
right.
Yeah.
Well, we'll see.
But nonetheless, if you're clearing off debt, that's
as long as you're not buying a boat, exactly.
that's
going
exactly.
on a
If you're not
vacation.
wasting the money,
Yeah,
if
exactly.
you're using it in a sound decision, yeah.
Yeah. So Matthew Miller traded an adjustable mortgage of 4.75 for a 30-year fixed of 3.5. Now there's a score.
That's it. I don't know.
Matthew Miller got himself a big score.
This is some poor reporting.
Yeah.
That for one essence they say, well, this person traded their adjustable rate for a 30-year 3.5.
Right.
They have up here that somebody traded for a 4.625.
Yeah. For
Why
4.
don't they tell us why there's a
Explain more.
1.1% difference in
Exactly.
those two mortgage rates when the
Right.
whole point of this article is talking about rates? And they talk about, you renovate your property, bring it up to code, allowing him to refinance into a fixed rate mortgage. The renovation increased the equity, pulled out $350,000 through a cash out refinancing. So there's a lot going on there. But pretty interesting, though, nonetheless, that as low as rates are, the thing I found most remarkable with that article, as low as rates are, they're above where they were in, what did it say, 2012, 2013, 2015, 2016.
Right.
That's remarkable, man.
Right.
We had some really low rates at those times.
Yeah. Yeah. We'll just bring this up right now.
Yes.
So I'm going to bring the 10-year yield up,
Let's do it.
and we'll bring this back. We'll bring it back 10 years.
Let's do it.
Okay.
That'll do it. That'll get us back to 2010.
10-year.
10-year monthly. There you go.
Look at that.
So they said it 2012, 2013, 2015, and the big one there was 2016.
So what we're looking at when we're saying that, folks, those are like 1 point. Look at that, 1.5.
1.318
Yeah.
was the low in 16.
And so the top of this range is 3%. The bottom is 1.5. That's 100% difference.
It is.
100% picture is 100% on hundreds of thousands of dollars.
And so look at this is a monthly, really 2012, man. We sat down there. So we go in May from 1.96 to 1.53, and we oscillate around. We made up to 1.89, but we were down there for a little while.
Yeah.
2013, you spike back down to 1.61, make it all the way up to 3.05, and then from January of 14 to the middle of 2016, back to 1.31, and then boom, right back up to 3.24 again, and then pretty quick decline, man. Look at that run in the beginning of 2019. 1.42, right? 1.42?
Yeah.
Not bad.
Yeah. It's, like, and if you're beginning technical analysis, like this is like a chart, like how does that work, man? How can it just be consolidated up and down? It's like, are we going to do this for years? Well, we don't know that now, but it's pretty
You
cool.
might.
And exactly. No, it's
You
like,
might, man.
You can't bust them down, you try to bust them up. You can't bust them up, you're trying to bust them down. It's just, I find it hard to comprehend how the Fed is going to basically push rates higher with the amount of government debt we have. I mean, it's never been that high. You know what I mean? So guess what, folks? Okay, you're still going to pay out bills, and the government is our Treasury is the largest debtor. So each and every time that rates go up, guess what? All of us are paying for it like, in an incredible way, whether you have a mortgage or not.
And I just want to check back on the VIX. We're above 15 now, man.
Wow.
Watch out.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 191, NASDAQ off 73, S&P's down 16. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's look at Tesla for a second, because we're always going to have great stories about Tesla. The bulls and bears are still fighting it out, and Tesla's down $16 right now, and it looks like we got where is that?
So this is the story, right?
Yeah.
So down almost 5% at its peak down today. Biggest drop in a month after analysts at Cowen said vehicle deliveries may miss the company's target this year as Model 3 demand slumps. Seems to be like a repeating story, right? That they're missing. Now, to be fair to Tesla, excluding the Netherlands and China. Well, come on, man. Don't exclude China. How are you going to exclude China?
That's why I want to look at this thing.
I agree.
I think they're crazy. I mean,
we expect Model 3 deliveries to be down compared to the prior quarter, but to be down? Why are they down? They shouldn't be shrinking anywhere, too. We're going back and forth.
Excluding the Netherlands, well, the Netherlands is small, but China, folks, okay, they gave the first 15 cars last night, they gave to their workers at the Shanghai factory. Yeah. They plan on, delivering in January. I mean, if they're up and going in Shanghai, man, guess what?
So Tesla may deliver some 356,000 vehicles this year, slightly below the company's October target range of 360 to 400. At the same time, Cowen raised its fourth quarter delivery estimate to 101 from 95 to reflect better expectations for the Netherlands and China. So they're going back and forth here a bit, you know. Osborne sees Tesla falling short of its Model S/X expectations, while his Model 3 forecast roughly in line with consensus estimates. Cowen's view contrasted with optimism at Wedbush, as another analyst, Dan Ives, in a separate note looking ahead to 2020, predicted that Tesla will find success in China with Giga 3, potentially hit 100,000. Listen, Tesla's probably going to live and die in China.
Yeah.
You know, as a lot of companies will.
That's right.
That's right.
Stay right there, folks. We got Think or Swim coming up next, and I'm Ambassador Chapman, Steve Rhodes. Dave White. I'll be back this afternoon. Thanks, Bill.
Thanks, man.
Go get him, folks.